Roll up, ladies and gents. Roll up. Real snooze fest on the markets today. How we doing? Everyone log in. Good to see you guys. Good to see you. Thank you for joining me on this Tuesday evening. Sun is down, but soon enough we'll be doing these webinars and it'll be light. There'll be natural light coming through the windows and we'll be back into spring, summer. Join us. We'll get going in a moment. Nothing much going on the markets today. It is quiet. Looking at my other screen here, we've got just real low numbers. Got Nasdaq doing hardly anything. It's just noise. S&P noise. Dow, all right. Dow's doing something. Russell, okay, all right. Russell and Dow, they are doing something. There's some volatility there. Everything else is pretty quiet, isn't it? USD JPY can't seem to crack that 150.80 levels. Trade at 150.40 at the moment. Natural gas catching my eye a little bit. It's been on a really It's been brutally battered for most of the year. Trading under 2 now. Kind of a little bit of a bounce gap. It's going to be interesting because there's a lot of bad news on natural gas. A lot of stuff about the weather. But it is extended, isn't it? Trend is your friend and all that. Who knows? Right, let's let everyone log in. Let me see who we got. Okay, good. Everyone's logging in. We shall get started right away. If you're new to webinars, welcome. Let me just we'll go to the disclaimer in a moment. Let's see what we're talking about today. So welcome. Hope you can all hear me. Should be good. Pretty used to Zoom by now. If you can't hear me for whatever reason, then just stick something in the chat. Q&A, we'll do some Q&A at the end. More than happy to help you understand some of the stuff I'm going to talk about today. And if I don't have all the answers, which I absolutely don't, I will definitely guide you to somewhere that does, or someone that does, that can help you out. Anyway, my name is Mark Holstead, trading for 20 plus years. When it gets past 20, I kind of stop looking at how many extra years it is, but in the markets for a long time. Like I said, I don't claim to know everything, but I've traded through a lot of market conditions, bear markets, bull markets. Just missed the dot-com boom when I first started, 2001, 2002, that sort of time. So I missed all that, but traded through a lot of different environments. And I feel like I've got some value to offer you guys. I also run Traders Mastermind, which is, I started out an experiment really, and actually now we're really building into a real good resource for traders who are serious about this business. You know, we've got so many kind of training modules in there, masterclasses, courses, some tools to help you get better results from your trading, dig into stuff. It's not a picture of Traders Mastermind, but that's what I'm doing. So why that helps you is that I also get to see a lot of different traders. I see a lot of traders who started out struggling and are now put in their first couple of green years and starting to get some traction. And I can kind of see the people who are doing okay, people who have kind of made it over that hurdle, and the people who are still struggling, and kind of notice the difference. So I get this kind of not only from my own perspective, my own couple of decades in the market, but I also get to observe how other traders are coming up, and the guys who are starting to make it and the guys who are still floundering, and kind of noticing some of the subtle distinctions between those. So, I try and share that with everybody. And my aim for all of these webinars, or anything I do, whether it's a podcast, a daily email, whatever, is just to help you get a little bit better. If you can take away something that helps you get a little bit better, that's my job done. You've got to put in the work. You've got to do the stuff. I know that. But I also think that you can take little bits here and there. It just helps you move forward. And sometimes it's one little thing that just triggers in your mind, and you go, that's how to get over that hurdle. That's how to be better disciplined. That's how to find a strategy that's effective. That's how to run my winners, whatever it might be. Let me just double check here. Okay, good. You guys are putting the Q&A. Is the chat disabled? I'm not sure. Is it disabled? Pepperstone has set this up for me. If you can't operate in it, maybe it is. Daniel, apologies for that. But use the Q&A if you like. I'll get to those questions at the end. Okay, so let's get started. So, yes, of course. Let me go back. Disclaimer, ladies and gents, please, if for your attention for a moment. Threat about CFDs, I'm not going to read all of it. Trading's risky. I hope you know that by now. If you've opened a trading account, you should know this. You should know if you're trading with leverage, it's a double-edged sword. You can make a lot of money, you can lose a lot of money. The name of our game is to try to cap those losers. We can never get 100% winners. Anyone who tells you that is just flat out lying. You're going to lose money, but to be an effective trader is to cap the losers short run the winners, also make more on your winning trades than you on your losing trades, for the maths to kind of work out. That's what you're trying to do ultimately. But understand that, it is a risky game, it is a risky business, and a lot of people do lose money in this game. So understand the game you're playing. And with that, let's move on. So today, I'm going to talk about what I call a trading drills and skills workshop. So this is really a second part to a webinar I did, I think, last year. You loved it, and I really enjoyed kind of presenting this type of stuff, because I think that all it takes is for one thing, and you go and go, let me implement that, and it moves you forward. That's just brilliant. That's just brilliant. So today, trading drills and skills workshop, what we're going to cover in a moment, I will go through. But first of all, I like to take a quote from the Stoics, or from a great trader, or from something that just makes you stop and think for a moment. Something about quotes that make you just stop, think, and you get on with your day, but it just sits there. Just let it sit there and just brew. So this one from Epictetus, one of the Stoics, really around the subject of kind of learning. For it is not the reading of many books which is necessary to make a man wise or free from sorrow, but to understand the few and to assimilate their teachings truly and thoroughly. So this is really apt for traders. When you think about all this and get through all the kind of language of the old times, wise or free from sorrow, if you eliminate that for a moment, and you just think, hey, you know what, how many times are we, digging into books, listening to podcasts, taking courses, watching videos, kind of webinars even, and we kind of don't really implement it fully. We learn a little bit, then we kind of try it, and then we try something else, and we're constantly scattered around. I'd rather you just grab one or two things and go, right, I'm going all in on those. I'm going to try those. I'm going to commit to those. I'm going to see how whether they're effective or not, and then I'm going to try something else. That is when I talk about, when I see lots of these traders, hundreds of traders in Traders Mastermind, and I observe those are the guys who go, yeah, my first green year and well happy, are the guys who have stuck with something and really given it all they can and made little course corrections. The guys who are kind of dipping around, different strategy hopping or trying this and trying that, and there's nothing wrong with that. But if you do it too much, then you're in this kind of, what Epictetus is saying is, hey, it's you're reading all the books, you're doing all the courses, doing all this stuff, you're not implementing. I think for most traders, they know what to implement, they just need support in implementing it. You need help implementing it. You need to get on and do it. So waffle over, let's get down to some of the stuff. So today, my goal for you is to equip you with simple yet effective trading drills. And you'll see what these drills are in a moment. And these are drills that you can run at any time, and they're designed to help you improve a specific trading skill. All become clear in a moment. But I have to say, as I am doing this with Pepperstone, that please use these drills on a demo account. Some of these seem really stupid. They seem counterintuitive. I will explain why these drills are here in a moment and why I think they're useful. But please use these on a demo, because you just should, because you'll see in a moment some of them make no sense. And the objective of all of these drills isn't to make money. It isn't even to manage risk. It's to isolate one thing and one thing only. All will become clear in a moment, but I want to mention that. All right. So think about football, right? And I think most people here, probably from Europe, UK, that if you're from the US, we're talking about soccer. Well, we're talking football, and call it football because that's what we call it over here. Think about playing football, right? Everyone understands football. You can't get good at football just playing matches. We can get reasonable, right? But you can't just keep playing matches and playing matches and playing matches and playing matches, because some skills don't necessarily come up in the match, right? You might be absolutely amazing at your set pieces. You might be an amazing shot. You might have a powerful on-target strike. You might be brilliant at that, but you're just really bad at passing, going around players, or run and move into space. You're never going to get the ball to take a shot. You might be amazing at this, that, the other, but the point is, you might have not even practiced a corner, and then you get a corner and you fluff it up. You have to practice these things. And matches are great, but training is where we develop the skills. But for some reason, when we're trading, we go straight into the market environment and we do everything. We're trying to manage our risk. We're trying to take good trades. We're trying to execute. We're trying to run our winners. We're trying to be disciplined, trying to have all this other stuff. And we don't actually do any training. So this is about you developing your training program to become a better trader. Because I think that we often dive into trading. We're in the heat of the moment. We're trying to make money. We're trying to make great trades. We're trying to maximize our winners, trying to do all this stuff. And we forget about some of the basic skills. And often they don't come up. Like just in football, that analogy, in football, you might say, oh, I'm really, I'm really good at, passing and getting around players and moving into space. But, I very rarely get a chance to, take a free kick outside the box. And then you might get one every 10 matches. But if you haven't trained for that, you're going to be good at it. So it's the same with trading. Like in the trading day, we don't know what's going to come our way. Do you get a couple of stop outs in a row? How do you perform in that? Do you get a trade that suddenly rips off in your direction? How do you manage that? Well, you just manage it out of impulse and reactivity if you've not trained for it. So we're going to train ourselves to become better traders. And I want you to create your own training program. And the idea is that we systematically improve each trading skill. So kind of chunked out some of the main challenges for traders, identified the skills we're trying to develop, and then give you some ideas. And some of you are going to laugh at these and go, that's absolutely ridiculous. That's okay. Just come in with an open mind, with this slide in mind, and think, okay, maybe that sounds silly, but hopefully the concept of training individual trading skills outside of the match day, i.e. the market environment, makes sense to you. Hopefully it does, because that happens in all walks of high-level athletes. The military do it. Obviously, medical do it, pilots do it and simulate, they're training different things. A great analogy would be a pilot. Many years ago, did my private pilot's license, and just go in and just fly around and stuff. You practice things, right? You go in with an instructor and he says, right, let's just do 10 takeoffs. Let's do 10 landings. Let's do radio calls only today. Let's practice navigation. Let's practice this. And then it starts to all come together. You don't just carry on just doing that and doing that. So the same with trading. It's worth considering and worth thinking about. Okay, so, and then we apply those skills on match day, which is the trading day. All right, so common trader challenges we're going to attack today. Over trading, is that you? Maybe it is. Overthinking, is that you? Maybe it is. Struggling to take a loss, some of you do that. Some of us do that. Struggling to hold a winning trade, not sticking to your rules. Emotions are polluting your trading decisions. So, these are kind of some of the common trader challenges, and we're going to try and attack those today. Okay, so I'm going to go through some of these drills, and like I say, these are to be done off the courts, if you like, or not on match day in the demo. Fine. The idea being that we're trying to drum into you, or whoever's doing this, some skill, improve some skill. Okay, so example, overtrading, problem, taking too many trades, solution, take fewer trades. Oh, yes. Well, no, you know what, Sherlock? Drill, one simple rule drill. So we decide on one simple binary rule, i.e., I'm going to go short under the prior day low, I'm going to go long above the high, I'm going to go long under the low, just something simple. We're taking away any thought, and then, by the way, with all these drills, as you'll see, the objective is not to make money. We're not trying to make profitable trades here, just like when you're in training for football, you're not trying to win a match because there's no match. You're trying to develop a skill. You're trying to improve your dribbling. You're trying to improve your passing. You're trying to improve your one touch, whatever it might be. So this is what we're focused on with trading, all these training drills today, is trying to improve one thing. Okay, so think of it through that rather than through the lens of it's going to make any money. No, it's not. These aren't going to make any money. There's not a point, but it's just getting better at that one skill. So decide on one simple binary rule. Very simple. Execute this one rule for 10 days. Right? This is a training drill to stop you over trading and taking things outside of your wheelhouse. So, for example, here's USD JPY. You might say, I'm going to buy, that's a bit not greatest quality, is it? But there's a 15 pip target and a 5 pip stop. And the rule is I buy the high. When it breaks the high, the prior day's high, that's it. There's a 15-point target, a 5 pip stop, or I sell the low, or both. That's it. The rules are simple. There's nothing else to think about. And you execute that 5 days, 10 days. And you might be like, well, this is pointless. It's not a solid strategy. Well, it's not a solid strategy. You're right. But what this is doing is it's stopping you from seeing something and diving in. Oh, a sexy 1 minute candle. Let me take it. Let me dive in. No. You've got a rule and you just want to stick to it. And the idea is you're honing, improving, and kind of solidifying your resilience to that inner voice that says, oh, but take that. Because what you do is when you're doing these training programs, you're basically trading drills, should I say, you're basically saying to yourself, this is a drill. My objective is not to make good trades. My objective is to complete the drill. You change the dynamic of why you're sitting in front of the screen. And that's super powerful. You'll see some of these drills later on that you've got a quite unique, quite interesting, I think. And you'll see that actually what you're doing, the way you're reframing, the way you're thinking about the market allows you to become good at that skill. We all just go into the market saying, I want to make money, I want to make money, I want to make money. And when you go into the market saying, I want to conduct this training drill and pass this drill or this objective, it just completely changes the way we think, it rewires those neurons in our mind, and we start to think about things differently. And the idea is 5 or 10 days spent doing this or any of the other drills we're going to cover in a moment will help you when you actually start to play the match and you actually start to trade. And your objective is to make as much money as you possibly can with the least amount of risk possible. Okay, so there's a simple rule, one simple rule objective. You've got a 15-point stop, 15 pip target, 5 pip stop, and that's pretty simple, right? Pretty self-explanatory. Okay, let's move on to overthinking. So that's overtrading. By the way, you can replace these with anything you like, right? These are just ideas to get you kind of thinking, okay, what's my problem and how can I solve that problem with a training drill? Going back to that slide where I said just holding your mind, thinking about that. What's the issue? What's the skill you're lacking? As you're playing football, like, I'm not very good at kind of, I'm always get caught offside or not very good at my throw-ins or whatever it might be. Okay, well, work on that. So same with trading. What are you not very good at? What's stopping you from moving forward? What's stopping you getting the results that you want? And you've probably got the knowledge and all the skills there, just not translating into P&L. What's stopping you doing that? And how can you develop a drill, a training program that you can run and operate to improve that relentlessly? So you're in a position then on match day, on the trading day, to actually put that to good use. So overthinking, another common thing for traders. Questioning the setup. Oh, is it going to work? Should I look at this? Should I look at that indicator? Let me get an RSI up. Let me get a MACD. Should the Bollinger Band be touching that? What about the Keltner? Is that inside the Bollinger Band? Oh, what's going on with the volume? Listen, you've got a setup. You've got a plan. We've got to just stick to it. Solution or problem, questioning the setup, solution, pulling the trigger without thinking about it. So I developed this drill called the coin toss drill and had another trader do this. I've had a few traders do this actually in Traders Mastermind. I said, hey, try this. Honestly, try this. And they're like, what? A coin? A coin? I mean, not the objective is not to make money. The objective is to get the signal and take the trade. The signal here is a coin. It's the most ludicrous, random thing you can get, a coin. And the objective being that when you see that signal, heads is long, tails is short. We can just flip it if you really must. You toss the coin, you get the signal, you execute without thinking. You don't start looking and saying, "Oh yeah, but support's nearby." Oh, you just execute. And the objective here, that after you've done this for a while, is you're just pulling the trigger without hesitation. You toss the coin, pull the trigger. Toss the coin, pull the trigger. Toss the coin, pull the trigger. And the sort of analogy is that the coin represents your trading setup, your trading plan, your trading strategy. On match day, you see your setup, whatever it is. I want to flush to lows, breaks to a low, does a little pin bar through support, sets up a spring. I want to buy in the close of the bar, looking for a move back to VWAP or open. Whatever it is, right? That's your trigger. You see it, you execute. If you're an overthinker, you'll be there looking at this and going back in higher time frames and doing all this type of stuff. No, no, no. So this keeps you focused on, I've got my action. It says to go long. It says to go short. Let me just do it. So you toss the coin and you take the trade without question. The coin is the signal. Crazy, fine, but do what needs to be done to get where you need to be. Who gives a you know what about how it is and what it does? We're not going to make money here. We're here to try to improve a skill. And I've had traders do this, and the success rate has been good. It's made people think, you know what? I thought it was stupid. I'm there tossing a 50p, going, oh yeah, okay, I'll go ahead. So at the open or whatever it is, you just set a time of day, same time of day, toss the coin, it's long. Yeah, but no, you're overthinking it. And that's the point. You got to get to the point. The first time you do it, be like, yeah, I don't really want to go long here. Maybe I should. Yeah. The whole point is that you just do what you're supposed to do. The signal's there, you take the signal. Donk coin, you go long. And after a while, you just do it without thinking. Now you're building the skill up, right? You get it? You're building the skill that in the heat of the moment, in the match day, you know what to do, you know what to do. I see the signal, execute. See the signal, execute. Oh yeah, but it's a bit oversold. Just execute, because that's the plan, and sticking to the plan helps you move forward, because you can then improve and iterate and make some course corrections later on after you stuck to the plan for a period of time. Something you can do if you really want to is if you want to really ramp this up and amplify this, every 5 minutes or 15 minutes or so, toss the coin again, and either you hold or you close. So you can play it that way if you want to. And exit, you can do it for an exit strategy and just say, I'm going to hold this for an hour and I'm going to close it. Or you can kind of do some different permutations. Don't overcomplicate it. Don't overthink it. But this is kind of really helps think really, hey, this is the signal. Let me just take the signal. Okay. taking a loss. So some people have this, and again, not everyone's going to suffer from all of these things, right? Um, there's not everyone's going, oh, I'm able to try to do this. So some of them will resonate with you, some of them won't. So not taking a loss. I'm going to give a hat tip to a long-standing member and Trading Mastermind for this because he struggled, who's now a profitable trader, doing exceptionally well, trying to size up his game. He struggled taking a loss, and he said, "Listen, I just need to practice taking a loss." And so he came up with his own little drill, which was, I'm just going to take a loss. I'm just going to take a loss. And I can't remember exactly how he framed it in his mind, and maybe it's slightly different. This is very similar. If you're in a position where you don't want to close a loser, you're like, and that's normal, by the way. That's loss aversion. It's a bias that all human beings have. We don't want to take a loser. And the last webinar, the webinar before, talks about some of the biases that affect us as traders. If you go to Traders Mastermind, click on webinars, you can see prior webinars, by the way. And Pepperstone have them on their YouTube channel, some of them on the YouTube channel. So you can look at them there. But I talked about loss aversion, where the pain of losing, say, $100 is way worse in magnitude than the equivalent joy of making $100. So you've got to be mindful that's affecting you. So if you're a person who doesn't like to close a losing trade, you're not alone. It's human nature. Don't worry about it. This is easy to get over, by the way. This is a quick one. If this is you, you can have this done in a week. You can have this done quickly. Close quickly without emotion. That's the solution. Drill, tight stop drill. Take 20 quick trades. A stop is 5 ticks, or even tighter if it's a market that's 5 ticks is a lot in the market. I'm thinking that maybe some weird stuff out there. But the idea is you want to take quick trades and you want to not think. So you take your trade, 5 tick, I'm out. Take your trade, I'm out. And you're going to have a few losers in a row because 5 ticks is noise, right? You might want to widen it a bit because some 5 ticks might not be possible to do by the time you've taken the trade. But you get the idea. Really tight stop, double target, 2-to-1 risk reward ratio. And the idea is that when the price gets to your stop, and what will happen a few times, I said you will be tested because you know the market, I know the market. The moment you go in and take the trade, stopped. You'll be like, what the? Why am I getting stops all the time? But the idea is you must take the 20 trades and not overthink it, not start going, oh, maybe I'll hold it for one more. Let me just see how the bar closes. Let me just see if it reverses here. Well, it's at support. I shouldn't really be selling it. No. The objective is, the drill is to take the stop. And the idea is you stop taking the stop, taking the loss, taking the loss, taking the loss without thinking, without hesitation. It's not a loss. I don't care. It's part of the business. Don't. It's not a loss. Don't care. Bomb. And the theory of this is because the stop is so tight, you're going to get stopped out loads. But I want you to feel comfortable with taking that loss. Season yourself to, or harden yourself even better to with the ability to take the loss without question, because that is unequivocally, all great traders have that. Taking a loss, not thinking about it. And often the loss stings, right? We're human beings. Nobody likes to take a loss. Sometimes it's part of business. You just water off a duck's back. Fine. That's how it should be most of the time. But now and then they sting you. One that, runs up. Maybe you've had a few lose in a row. You get a nice one, runs up close to target. You just hesitate a little bit, doesn't quite hit your target, whatever it is, comes back, stops you out. No one can say they don't sting, but the point is you still have to execute the plan. Take the loss, move on, next. So you just start polluting your emotion into that decision-making process, you're screwed. You're back to those biases that are affecting you. Loss aversion is kicking in. So if it's you, struggle to take a loss, try this tight stop drill. Adjust some of the variables to suit you and suit your market. Okay. Holding a winner, big one for traders. There isn't really much you can do with this other than just run a hold the line drill. So a hold the line drill is basically saying, listen, decide the setup you want to hold and for how long. And preferably something like, a great one as an opening range breakout. I've covered that so many times, and it's such a good strategy for, I say beginners, but advanced as well, because you can adjust and tweak and adapt it. Done a couple of webinars on it. A daily email I talked about last week, it wasn't doing too well. This week is much better. But the point is, whatever it is, some systematized strategy. And the reason I say the opening range breakout is because it forces you to hold it, because actually, if you start to hold these trades for a little bit longer, they're going to work out better for you. So decide which trade set up to hold and for how long. Take the trade, hold the trade. So if you're trying to hold a trade, the idea is that you want to stretch yourself a little bit more. And there's a trader I'm working with at the moment. He's probably on the webinar. hello to you, you know who you are, who's done exceptionally well at holding his trade a little bit more, a little bit more, a little bit more, starting off 15 minutes, 45 minutes, maybe a couple of hours, then next it'll be a day. And the thing is, once you start to hold a trade, you might not want to be a trader who holds a trade for 1, 2 days. That's fine. But if your new high watermark is, hey, I've held a trade for multiple days, then holding it for an hour is no problem. If you're constantly snatching at profits, then as I kind of discussed the other day with this guy, the maths doesn't work. If you're constantly grabbing profits and grabbing losers, you ain't going to get anywhere. And eventually you're going to get frustrated and think you're going to end up magnifying those losers. You need to hold those winners. You've heard this many times before, guys. You've read the trading books, holding on to the winners, cutting the losers. If you struggle to hold the winners, you will struggle to make a consistent gain in trading. You have to get this down. This is such an important part of trading. So try it. Try saying, you know what? I'm just going to hold this trade. And like I say, this is not to make money. This is a drill. And if you frame it as a drill, it becomes a lot easier. You take the trade, you go, I'm going to hold this 15 minutes. How long have you held a trade before? You're like, oh, 4. Well, there you go. Try 5, try 7, try 10. Just get comfortable with the act of having a trade on, going away, going for a walk, doing whatever you do, and feeling the fact that you've got a position on. You know, the more comfortable you can feel like that, the more you can develop that skill, the better you can be in match day. When you have that trade on, it's a bigger position. You're increasing your size. You're playing the game. You've got a great trade. I think it's got a good chance of hitting that target. You want to bank that profit. You see that unrealized P&L sitting there flashing. Maybe it's hitting that first level of resistance. You're like, oh, got to try to take it. Like, no, listen, man, this thing has got a good chance of closing at highs. Don't touch it. Run this winner. And you will draw on the skill you've developed to say, you know what? I felt this before. I felt the urge to close a trade. I felt the urge to grab that dopamine hit and take that $8,000 or $800, $80, whatever it is. And actually, I'm not. I'm going to hold it because the plan is to hold the winner. So this is a skill that you can develop bit by bit. And run this for 10 sequences, 20 sequences. Just to hold the line drill helps massively. Okay. A few more for you. Sticking to rules. So not sticking to your trading rules. Honestly, this is probably a way bigger can of worms. And when I've talked about this several times in different tactics and stuff that are perhaps more comprehensive than this. But the idea is that you just kind of have a simple decision to make. And I think the opening 5-minute drill is good for this. So you've got 5 minutes to make a decision. Okay. The rules are you have to make a trade within the 5 minutes. Open 5 minutes. You have to make a trade. Are you buying the close of the bar? Are you selling the close of the bar? What are you doing? And the reason this is effective is because the rules are simple. You got 5 minutes. There's your time limit. You know when the 5 minutes starts, it's the opening bell. I'm talking about whether you trade a DAX, a FTSE, US, whatever bell you choose to have. Nikkei, fine by me. And you're waiting for 5 minutes and you're making a decision. Now, you might be like, there's no edge here. You're right, there's no edge. But that's not the point. The point is the rules are 5 minutes, make a decision, long or short. You've got some decision to make. And it's a very, very limited decision. No, you've got to do is long or short, right? One trade, no more. But the point of this is you will start second guessing and go, oh, I want to wait a little bit. Oh, you know what? Maybe I should. No. The rules are very simple for a reason. 5 minutes from the bell, decide to open or close. If you're struggling to stick to rules, do this. And then you can say, why is this powerful? You might be like, what the heck, man? This is nonsense. But I'm telling you, why is this powerful is this. If you can stick to something as simple as this, which is very defined strategy, very defined rules, you've got one decision to make, there's nothing on the line, you're doing it on demo. If you can stick to this for a period of 5 days, 10 days, when you haven't been able to stick to any rules before and your discipline sucks, you can at least use this to draw confidence from. You can say, hey, I ran the opening 5-minute drill. And I completed it successfully. I didn't deviate. I did every day exactly what I said I was going to do. That might be the first time you've done what you said you were going to do in the trading environment. And that sounds brutal, but it's the case. And it was the case for me. I would break rules so much, all sorts of different rule breaking, and realized I could not continue like that. If I wanted to get to the higher levels of trading that I wanted to get to, there's no way I could operate with this sloppy character. So if you're breaking rules, you're not sticking to rules, try something like this. It's worth doing because even if you do something as simple and as stupid, if you like, as this, you can draw in and say, listen, I stuck to that. So I can stick to rules. So when you're in that depths of despair, that like I couldn't stick to rules, I couldn't do this, couldn't do that, didn't work. Why can't I do this? Why can't I do that? As we all get as traders at some point on that journey upwards, you can say, well, I did this. I can actually stick to rules. You can shake yourself by the head and go, I can stick to rules. There may be very basic rules, but I can stick to rules. So the sticking to rule, the opening 5 minute drill it is, I think, is very effective for that. And as an example, right? As on the cues, and I've even used the cues just to show you where the open is. There's the open. What am I going to do? Am I going to buy or sell the bar? And you kind of make your decision. You're like, well, it's gap down here, blah, blah, blah. Or it's gapped up. You make a decision. There's no right or wrong. We're not looking to make a successful outcome here. The successful outcome is purely sticking to the rules. Hopefully you get that. Okay. There's another one. Are we for time? Well, we're good. If you have any questions, stick them in the chat, guys. I will get to them at the end. I'll definitely make sure we have time for Q&A. Quick decision making. So back in the old prop days, I mean like the old prop days when you used to sit in front of a desk and you pay, it used to be about 1,500 quid to sit at a desk in London, and it'll be a desk fee, and you get quick trading feed. You get a powerful machine, you get all the software and stuff. I know now, brilliant for traders. We don't need this broadband or whatever, fiber line. It's absolutely perfect now. We've got powerful computers, got great software. You didn't need it. But back then, if you wanted to kind of play the game of scalping and being co-located, all that type of stuff, you could get edge trading with prop firm, right? Prop firm would give you better commissions, blah, blah, blah. They would often come round, tap you on the shoulder and say, no, they wouldn't do that. There's two things they would do. Put you in a position, say manage the position. Just come along, click your hotkeys, you're in a position now, manage it. And you'd have to manage it, right? Real money, real account, big position. Get on with it. And that was training you to think quickly, think sharply, and deal with that position. Should you close it? Should you hold it? What should you do? All right. Some people are like, that time you're 10 ticks down, 50 grand down. Bad luck, pal. You failed. This is kind of leveraging on that. The other one that's tap on the shoulder, by the way, was why are you in the position? Unless you can answer that very succinctly within a couple of seconds in one sentence, close the thing then. Close the thing. The language is a little bit more blue than that, but close the thing. You shouldn't be in the deal. If you can't tell me why you're in that position within 5 seconds, I don't want you in that position. Get out of it now. Same type of thing. Got to be thinking quickly. So, dithering, missing a great trade fill. Now, be careful we're not moving into overtrading territory. We're not trying to be crazy scalpers that's punting away and getting no edge from the market. No. It's when you see a trade and you just dither. You've been there. I know you have. You've seen a trade. It's come below. You're like, man, this is just a thing of beauty. And just go, got it. This is exactly what I want. I'm going to take this trade. And you just hesitate. You're like, oh, I wonder. By the time you wonder, bang, it's popped up. You've missed the fruit. You've missed that decent entry that you know you should have bagged. So if you keep doing, if that one-off, fine, it's going to happen. Right? Human being, we can't do anything perfect. Don't expect to do things perfect. But this is a kind of thing you can improve. There's a website called Random Timer Generator. And the idea of this is you set a timer between whatever you want, like 5 seconds and whatever minutes. Just do 5 and 20 seconds. Put the timer, and it looks like this, by the way. You can set it and have this toggled. So show countdown. You don't want to show the countdown. So I've got this toggled off. You click it, and at any time between those two, minimum 15 and 30, you can do 10 and 30, whatever. You just want to get ready. It will set an alarm. Right now, that's when you must then take a trade. The idea is you don't know when you're going to be told to make a trade, and you shouldn't look at your chart and have it prepared. You should just go, right, alarm, bang, bring up the chart, assess the trade, good level for a stop, good level for a target, execute the trade, 10 seconds. Now, you might be like, this is excessive. But again, I think you get the point is to just get used to making a decision and not worry about the consequences of the decision so much, because the risk is managed for you. If the trade is planned and you know roughly what you're doing, the context, the structure, the play for the day or whatever, however you make your trading decisions, then when it comes to game time, you've got to actually pull the trigger. You can't be dithering. You've already set everything up. You just have to execute. So this kind of improves that. Don't overthink things again. Let me just do what I'm supposed to do, which is bang, alarm's gone off, bring up the chart, trade. Bring up the chart, trade. Just like on match day, when a striker gets the ball, he can't be thinking, oh, well, I'm going to shoot this. He has to just bang straight away. Everyone's off balance. The keeper's moving this way and that. Defenders are all trying to get over to him. The ball's there. He can't wait for it to be perfect. He's just got to take the shot and hit the shot where he thinks is the best place to go. So just like that. And how does he get good at that? He just trains. crosses in, crosses in, crosses in. Take all different types of permutations of this. So one way of doing this for you as a trader for your quick decision making is to have this random timer generator give you an alert at a random time between those ideas, and then you take a trade. All right. This is a good one, right? If you've been drifting off, you might enjoy this one. Adding to winners. So this is advanced, right? I know that many people go, oh, should I be adding to winners? And generally speaking, I'm not qualified to give advice, but I can say what I think is correct. If you are a developing trader, a beginner trader, if you like, and I hate the word beginner, developing early stages of a developing trader. It's funny to say beginner if you want. Then adding to winners is just it adds an extra layer of complexity that's not worth it at the moment. So I would advise, I'm not advising anything. If it was me, I'd advise, there we go. If it was me, I'd advise myself not to add to winners until you have some consistency and some reason to add. Because all you do is adding to stuff trades that aren't working, right? And it's fine to be struggling at the beginning. It's fine to be your equity curve to be going the wrong way because you're learning. So you don't want to amplify that. You want to amplify your results when things are working. So anyway, but listen to it, bear it in mind for when you're ready. Problem, not adding to winning trades. It's not for everybody. Not everyone thinks that adding to winning trades is the way forward. I happen to think that it is under certain conditions. I know other traders who add to them religiously all the time, and I know other traders who probably have a similar take to me. Is like, on the right trades, I want to add. I want to press. I want to get more aggressive. I feel like the odds are on my side. I feel like the risk-reward ratio is good. I feel like the odds of success are good on this. So let's press. Let's risk a bit more capital. Again, how much you risk and your risk tolerance is up to you as an individual. It's not for me or anybody to tell you how to trade. And then others are like, hey, I'm never going to add to winners. So do what you feel is best. Solution for this, confident incremental adds. Get confident adding to winners. Regardless, if you're doing this on a demo, it's a kind of good, fun exercise to do because if you know you can add to winners like this without even thinking about it, and you'll see in a moment how it gets so tough, it's a great skill set to have, even if you're not ready to run it live, even if you're not ready to kind of actually implement this in the match day. I'm using this analogy all the time. I don't even plan to use this analogy. I think it's a genius analogy. You might beg to differ, ladies and gents, but I think it's a good one. On match day, the trading day, you are comfortable doing this, and it's almost like it's the hardest thing in the world when that trades up. And this is why developing traders struggle, right? Let's say you're up $1,000 on the trade, £1,000 on the trade. They want to take that so bad because they see it going down to 950, 888, 850. Oh man, it was 1,000 a minute ago, and it comes back up to 950. I'm taking it. They're trading their P&L. They want to snatch it. Whereas the traders who are a little bit more experienced look at the chart. They're not looking at P&L anyway. Look at the chart and they're saying there's more there. I need to press. I need to add to this. That's held that level. Let me put another clip on. Let me put another batch on. Let me see if I can squeeze a bit more juice out of this. And it's tough. It is tough. I get it. One of the hardest things to do as a trader because you want to bank the profit. You naturally want to bank profit. You feel good. You're adding to your P&L. It feels like it's the right thing to do. But it is a lot of the time. But sometimes it's not. Sometimes it is just pressing. Look to hold winners first, before you add to them. Just going off piece a little bit. To hold winners first before you start adding to them. Get that capped off. Get a checkbox in that skill area, in that skill. You know what I mean? And add to winners later. Anyway, aggressive adding drill. Okay, so this is a good one. Decide on your add increments. And again, this is a skill thing. We're doing it on demo. Disclaimers. Decide on add increments. I suggest 5 to 10 ticks. Depends on the market you're trading, right? That might be too much, might be too little. Adjust it. You'll see in a moment. I'll give you a great chart example on the NASDAQ. And this makes sense until I show you on the chart, but I'll tell you anyway. Stop is moved up with each add. So every time you add, you move the stop up. We'll show you how you do that in a second. Trade is closed either at break even or stop or at 10-hour profit. And you are just taking the trade, and the setup is up to you. It's up to you how you take the trade, and you can decide whether to have that fixed, whether it's the coin toss thing. You can use the coin toss for a specific time of day, or whether it's an actual strategy and setup you deploy. Normally, stick to the drill, log the results. You will be surprised. You can't make any promises in trading, but I think you'll be surprised at the results. You'll be like, you know what? That's interesting, man. I didn't expect that. So let me hopefully clarify this for you and show you what I'm talking about. So this is NASDAQ or Pepperstone's equivalent, which is the US 100, the cash CFD product. Okay. So imagine you were going long Let's say 30. After we had that little flush low, look, it's almost, it's not quite. I didn't really cherry pick this because the point wasn't trying to cherry pick a great setup. Pulled something from the chart and said, okay, that's reasonably might do that. It's like it's almost a Wyckoff spring trade, right? Pops to the lows, pops straight back up within a minute or so. This is a minute candle. I think it's a minute candle. Yeah, a minute candle. Pop straight back up. You might be like, okay, I'm going to take it as we kind of break through the high of this candle here, right? That's the idea. And again, I didn't pick this as to be a great example of an awesome strategy, but I just wanted to show you what you're doing with this drill. So you're longing one, going longing. You're longing to get long. You're not longing to get long. You're taking a long one unit, one clip at 17,920. So I'm just using it and rounding it to kind of to keep it simple. So you're going long at 21. Your stop then goes at 10. Fine. Here you go. Rough. So $10 stop. Off we go. Now we hit 930. You add another one. Okay. Then you bring your stop up to 20. It keeps going. You add another one at 40. You bring the stop up to 30. It keeps going. It keeps going. You go to 50. You add another one. You bring your stop up to 40. And now for the mathematicians amongst you, you're kind of working out going, all right, well, if I'm long at 50, then my average is kind of going to be here at in between here and here, so about 35. Well, it's 35. I've gone on 20, on 30, on 40, on 50. Okay, but my stop is this. So at some point, you're actually guaranteed a profit, right? Up until you've kind of added this point here, because you've got here, you're going long, you've got $10 risk. Here, you're adding, you your stop up, you're going to be break even on this, but you've got $10 risk on that, etc., etc. You can work it out for yourself. But then ultimately, it hits 60, you exit it all because that is a 10-hour trade. When you work out what you've done, you've made $40 on the first ad, $30 on the second, $20 on the third, and $10 on the final ad. And you drag your stop up as you've gone along. Now, why is this effective? This is effective because buying at 50 when you've just bought at 20 is tough, because didn't mean to do that. Buying at 50 when you've been long at 20 is tough, because every single trader under the sun, or I'll say developing traders under the sun, are gagging to take profits at that point. They're like, I want to take profits, I want to take profits, I want to take profits. But in actual fact, look how much incremental cash flow you can make on the trade just by doing this. And I recognize this is a nothing strategy. I recognize that. I get it, right? But it just shows you that it's possible to put 10-hour trades in from a very, very small, meaningless move, right? And the reason why we're doing this is because it's super uncomfortable to add. Maybe one ad. Most people add on when it's going against them, by the way, which I think is a massive mistake. This you can if you have some structure to it. That's a different topic, perhaps. But adding, that's tough. And the reason I say take it at 10R, because I think that proves you'll get sometimes when you've done this trade, we go, actually, there's a few 10Rs there. Jesus, has worked out pretty well. And so I'm not saying you suggest you do this on match day. I'm not suggesting you add so aggressively, because you can see one little flick back and you're out the game, right? You're out the game. So you've got to do it in the right environment. But the objective here is just is to show that actually when you're adding to a trade, adding to a trade, you can get some pretty extreme results. Yes, I get it that you're kind of really adding more risk and you're incrementally kind of dialing up the risk, and the average is just going higher and higher and higher, and every time you add. I understand it, I get it. But the point here is just to be able to add without question. And this is why we use these fixed blocks. It's not like for discretion. It's not like, back to support, it's this, that, the other. It's incremental block. It's up 10, I'm in. Up 10, I'm in. Where's my stop? It's up. And not overcomplicating, overthinking things. And very often it's going to come back and stop you out. And sometimes if it's all rallied up, and it will come up, might not hit that target, come back, stop you out. That's the worst kind of point to get stopped in a way, because you make something, but you're almost there making a lot. So anyway, this is worth considering. Long at 20, stop at 10, long, bank it when you get to 10R, or it comes out and stops you out. By the way, stop is incremental on everything. So your stop will be at 10. Then so when it went to 30, you add another one, you'd be long 2, you'd have a stop 2 at 20. Long again at 40, you'd have your position size would be total 3, and 3 will be at 30, and so on. So you're just making it simple for yourself. And the idea, again, is just that you're adding without thinking of the consequences of adding, and without overthinking stuff. You're just adding to your position. This is a great little drill. It's tough. It is tough, because every fiber in your body, when you're not used to adding, doesn't want you to add at 50. You're like, when I'm adding at 50, man, it's rallied off this low. It's due a pullback, due a pullback, due a pullback. But trust me, this is the type of thing that helps you just get conditioned to just operating with a clear, focused mind, confidently adding to your position. Okay, I think I got one more for you. Yeah, I have one more. And I pulled this from the last webinar I did. I think it was last year, and it got a lot of angry actually feedback. People were like, "This is ridiculous." Let me just remind you guys. I know you on here. You're a different crowd. I know you guys are a different crowd. The losing trade drill. So the idea of this is, you might be like, what's this guy smoking, man? What is he smoking? Losing trade. Okay, let me explain. So when we're trying to trade and our objective is to make money, very often our subconscious biases are impacting our decisions. Just mentioned those before, the loss aversion. I did a whole webinar discussing those in detail, and I'm by far an expert on it, but I've kind of almost become a mini expert by proxy because of our trading and recognizing my mind plays such a huge role in kind of the impact of how much money we can make from the market and some of the challenges we have, when we're scaling up our operation, all this type of stuff. So your mind causes friction when you're trading, like it or not. So we want to rewire the meaning of a winner. So the drill is the losing trade drill. Don't laugh at the back. Your goal is to lose as many trades as possible, right? You might be like, yeah, well done, you genius. I'm already struggling. I'm already losing. Okay. So if that's you, try flipping it on its head. Go into the day, again, demo, please, demo. Go into the trading day with the objective of trying to make losing trades, trying to lose as much money as possible. That really screws with your brain because your brain's like, so what do I do now then? Do I sell breakdowns? Do I add to my position? Do I scale? You kind of wonder what you should do, but this is good because when you start to think, I need to think like a loser, you think, what do all the losers do? Well, the losers don't cut positions, are losing positions. Okay. Right. So you try to become a loser, and it's really tough. And the idea is that you're trying to do as many losing trades as possible, boost that negative balance. And the goal here is to rewire your mind into how it thinks about trading, how it thinks about winners, right? The idea is that you go, hey, you know what? My objective here isn't to make money. My objective is to make losing trades. And that just confuses the brain enough to hopefully go, well, actually, listen, okay, what should I be doing? Because you start to think a little bit more strategically about what it means to be a losing trader and how you could pick losing trades rather than with the objective of making money. It's difficult to explain, but I think, when you try it, you might be like, okay, let me try it. And by the way, yeah, demo again, this is just to try to kind of, jolt your brain into thinking differently. And you notice a lot of these do that. A lot of these are to try to, interrupt those thought patterns that you've built up from years and years of trading and go, you know what? I need to think differently. And here's the conclusion with this. If you can successfully lose money, if you like, again on demo, if you can successfully do this, then you've probably got a mindset problem. You've probably got something wrong with nothing wrong with your mind. You've probably got something that could be adjusted with the way you think about trades. It's actually dealing with the financial aspect of trading that's causing you problems. If you can successfully lose when you want to, then why could you not successfully win when you want to? It's got to be something to do with money. Now you've isolated the issue. Now you can deal with the issue. Now, if you're trading and you struggle and you end up making money, then it's probably more a strategy issue. You've probably got to go, you know what? Maybe my strategy's got no edge, and I'm trying to deploy this. I'm trying to deploy the opposite. And it's just not working, and I need to rethink everything and kind of rewrite the chapter, start from scratch, and think differently. But it's interesting. It's an interesting task to do because it's so alien, right? It's so crazy. It's like, well, why would I do this? But it just rewires the way you're thinking. Okay, summary. So we've covered a selection of trading drills, and the trick is to identify what your problem is, what your challenge is. Not problem, challenge, hurdle, thing that you want to improve, right? We've all got that in trading. We've got something we want to get better at. And then you come up with a drill to tackle that challenge. Think, hey, I want to go on the training ground. What can I train? What skill can I train to get better at? And not enough traders do this, but this is a big leap forward. If you get it right, and you can say, you know what, that's bad. I'm not very good at that. My skill there is poor. And you train it. not on match day, but you force yourself to train it with a drill that you make up or one you stole from me, fine. Then you improve at it. Just like the footballer who's like, my left foot sucks. Okay, give me ones to the left foot. Give me ones to the left foot. Let me have a shot with my left. Let me have one touch with my left. Let me do whatever with my left, 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 left. And they'll sit there on the training ground, bang, 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 just getting better and better and better. And that's how you improve a specific skill in life and in trading, is to identify the skill you're trying to develop, identify and create a training program, a training drill for that, and run that drill. I don't recommend doing more than 2 drills at a time because it kind of gets confusing. It's already tricky enough. Some of these already make zero sense to your brain, like, oh gosh. But you want to focus on one issue at a time, deal with it, attack it until the issue is resolved. Like I say, feel free to come up with your own drills. These are just ideas for you. But I really think that if you take away that idea of, you know, the analogy of football player, hey, what are you weak at? Where's your weakness? And what does it need to do to kind of get you over the hurdle? Okay, what can I come up with that's going to help me overcome that weakness? Another trader I was talking about in Traders Mastermind, who's been a member for many years, he came up with himself. He's like, I just struggle to take losers. All right, how can I fix that? Thought about it. Right, I'm just going to take losers, take losers, take losers, take losers. Fine, fixed it, move on. You know, history, doesn't think about that anymore, works on other things. All right. Let me take some Q&A, guys. I'll pause for breath. I think I ran through very quickly with that, but I like this type of stuff. If you haven't subscribed to my daily email yet, please do. I think you'll enjoy it. If you go to tradersmastermind.com, top right, daily email. We're about 8,000 traders in there now. Enter your email. 7:30 each morning, I send you an email that is designed to help you improve your trading by 1% better each day, whether it's talking about strategy, whether it's psychology, whether it's a little quote, whether it's just something that's helping you move forward in your trading. If you like this type of content, this type of stuff, then the email will be right up your street. If you want to be given trade recommendations, then the email will not be up your street because we never do anything like that. But there's plenty of other stuff out there that caters for that, if that's what you like. But if you like this type of stuff, you like to develop yourself as a person, as a trader, and improve and get the best results that you possibly can, then sign up. It's free, and you get it in your inbox every day, 7:30 a.m. All right. Phew. Let me go to the Q&A. If you've got questions, ladies and gents, I will answer them. If you haven't, then I shall either take it that you, ladies and gentlemen, have fallen asleep, or I have covered everything. So there's a couple of questions here. Sindri says, let me move it under the camera. Don't know if you can see that. Don't think you can. I lack capital and tend to overtrade to try to gain more. If I stick to a few trades, then I do okay. If I succeed sometime, how do I then maintain it if bigger capital is different? I lack capital, okay. Tend to overtrade to try to gain more. Common. Undercapitalization is difficult for many traders. If I stick to a few trades, then I do okay. If I succeed for some time, how do I then maintain it if bigger capital is different? Okay, so I think the question you're asking here, Sindri, is right. You're undercapitalized, fine. Don't focus on growing the capital yet. Focus on the job of producing great trades. Focus on the job of just putting some numbers on the board. Get a green month, get a green quarter, get a green year, and do what you have proven to do, or you've said you've done when you stick to a few trades. You just focus on a couple of trading ideas. You stick to those. You don't overtrade. You do this other stuff, and don't worry about the number. Don't worry about whatever number that is at the moment for you. Don't worry about it. When you've got to a point where you've put in a decent kind of chunk of time, then you go, okay, well, now what do I do? Do I try and extract more from my winners by adding? Do I want to trade more size? You know, come up with a strategic plan to go, okay, I'm at phase one, and phase one is X dollars, X pounds, X euros, wherever you are. Phase two, okay, I've proven I can make this. Now, how do I get to the next level? How do I to get to 10X that? Well, I'm going to have to take some risk. I'm going to have to, maybe take a little bit more risk on a trade. And where do I do that? And because you've got the experience and proof that you've kind of managed to build that modest account up over time, you can look back on that data and look back on that experience and go, actually, you know what? A blanket increase in size may not be the thing for me. Overtrading more strategies and more trades is definitely not a thing for me. Okay, maybe I should be adding to some trades. All right, well, how do I kind of go back and look and see where I should be adding or I shouldn't be adding? So that would be something to consider, is to not think about trying to boost your capital. Just boost your returns, as in consistency without massive drawdown. And then when you're at the end of that, go, right, now come up with a plan to try to boost my capital. Um, Jacob says, "Hi, Mark. I know this is a question you shouldn't ask, and it depends on so many factors." Well, I'm wondering, Jacob, what is this question you shouldn't ask me? But ballpark, what can a profitable trader make percentage-wise on an account per month, just on average from your experience? This is a question I get a lot, Jacob. And you know what? It depends on how much you're prepared to risk. If you're prepared to risk a lot and you're prepared to take massive haircuts in your account, then you can make a lot of money because you're trading with leverage, right? Leverage, however you want to pronounce it. If you're prepared to say, right, well, I'm going to, try and get 5 good trades in a row, but I'm going to risk a lot of my account on each of those. You might get 5 in a row and you might do very, very well, but your risk of ruin has really ramped up, man, really ramped up. Then similarly, you've got someone who says, you know what, I really don't risk my capital much. I want to risk 1% on each trade. I'm only going to trade once a week. Then you ain't going to make much percentage wise. So, and I know this is not really the answer you want, but I've seen traders who have turned, let's say, 7 figures. Was it high seven? Not really. 7 figures and doubled that in a year by taking reasonable risk, and it was a 7-figure account. And I've also seen traders who have kind of traded with bigger accounts and have made much less, but that's okay for them because they don't want to risk too much. And I've also seen traders who've started with a really modest account, maybe had a little bit of luck, ramped that up very, very quickly, made it an obscene percentage because they've used capital as a tool and they're prepared to risk a lot of their capital. And the percentages are just ridiculous. When you look at my paper, like, that's ridiculous. Well, actually, I turned 1 to 5, 5 to 10, 10 to this, because I just leverage up more and I was prepared to take the risk. So I know it's not the question you want. It all comes down to risk, Jacob. It's like, if you've got a small account and you're trying to make it into a bigger account, then you are going to have to take some risk. That's just the way it is, a double-edged sort of leverage. If you don't want to take the risk, then you have to accept that, hey, you know what, maybe the returns aren't going to be as chunky as I'd like. If you listen to my podcast, actually, there's a couple of interviews I did. R2 Kokilla, he manages 32 million, 35 million. He trades FX over news, and he makes I've forgotten his returns now, but he makes like a decent return when his risk isn't that much. He's putting in some good numbers. And then you look at some other guys who are managing maybe larger amounts of money, then percentage wise it isn't that much, but actually they don't want to make that much because they don't want to draw down too much. I guess the summary is, Jacob, is decide how much you're prepared to risk, right? And if you're prepared to risk, you've got money in your trading account you can afford to lose, which is actually, I think you should be doing that anyway. It's risky business, and there's not a recommendation at all. You make your own judgments. You then decide, hey, I'm prepared to risk a big chunk of this. I've had some success. I've had some consistency. I actually now prepared to risk it a bit more to make some more. And I know where my edge lies. I know where my best chance of success is. I know there's a little bit of luck involved. And then you kind of go a bit of a boost, maybe in a specific market environment. The market's right. You're right. You're feeling good about stuff. You put a bit more risk on. You make a bit of a boost to your account. It looks good. You're like, okay, the market's changed now. Let me just calm down a bit and play that game. Then, then you've got a chance of kind of similar question to, I guess, Sindri, boosting your account equity. But just remember, the more risk you take, I know this is obvious, but the more risk you take, then the chance of deeper drawdown is massive. And very often it's almost impossible to recover from some really, really heavy drawdown. But I get it. If you're trying to make some decent money off a relatively modest account, you kind of have no choice. But I just don't rush that. Don't rush that part. Thanks, Robert. Danius says, do not see trade entry until it is too late to enter. It is easy to see when I look back. Diagnose that, Danius. Danius, I don't know how to pronounce your name correctly. Apologies anyway, but it's a good question. You are looking at stuff. You need to go back, print off the charts of the trades that you see too late and say, what are the attributes 5 candles before, 3 candles before, whatever it is, that I need to see, that I can maybe look at to get an idea that actually, you know what, maybe I should see that trade. Maybe I should see that trade. Maybe I should observe, look for that. I mean, if you're seeing a trade entry until it's too late, then obviously be careful. You haven't got hindsight bias creeping in. And it is easy to look back and say, I would have gone there, would have gone there. But the trick is when you're kind of marking it with charts and you're analyzing is to say, actually, is there any clue that I could have looked at to see that before that momentum ignition started? Is there any clue that reversal happened? Sometimes there isn't, but sometimes there is. And you go, actually, yeah, look, the volume spike there, the big range in the bar. Yeah, that's interesting. Maybe I should be looking for that. And so reverse engineer what you're trying to achieve. Um, or you go, you know what, that trade's gone. What's the next trade? I think you kind of start to think in terms of sequences. Hey, what are my trade sequences? What's the next play? I've missed this play, but is that setting up something else? If you missed that kind of breakout, maybe should I be waiting for a pullback to the breakout point to buy? Rather than worrying about missing the breakout, what's the next likely setup? Or maybe it's going to come back to some support and do another leg. Maybe it's going to flush out and I can take an exhaustion trade and thinking, sort of playing the game of chess with trading rather than drafts or checkers spinning away from. Okay, Ronnie, is it okay to study and trade only one pair? You can master it. Absolutely, Ronnie. I think that's the very, very, very good approach. Too many traders, I believe, and I probably did this myself at some point, just trade too much stuff, and you can't master it. You master one pair. Now, the downside is if you're trading a pair and just slow, you're sitting there twiddling your thumbs. So maybe have a couple, handful that you monitor, especially Forex, because it just goes in fits and starts, right? Sometimes it's really, really quiet. Sometimes it's really, really, volatile. If you're trading something like the Nasdaq or the DAX, generally speaking, you're going to get something most days. Today, maybe not so much, but generally speaking. But anyway, summary is yes, specialize. I think that's a very, very good approach. However, remember, you can also specialize in a setup. So you maybe have a basket of pairs that you watch and observe, and you go, "Hey, I'm very good at trading the bull flag. I'm very good at trading the exhaustion flush. I'm very good at trading Wyckoff spring, whatever it is," and become a specialist in that way. So I think become a specialist, study, and get to know the nuances. And also, by you asking that question, I know you believe, and know, not believe, that each has their own little nuance how they trade. So the danger when you're flicking around too much is you lose that nuance, you lose that little bit of intuition and feel. So don't spread yourself too thin, but at the same time, if you focus on just one bloody pair and it's not doing anything, you're like, God, it's not doing anything again. You can come unstuck. So, excuse me. So again, not a definite black or white answer, but hopefully that helps a little bit. Barry says, excuse me, gents. Barry says, "Hi, Mark. Good stuff. Thank you, Barry. Having issues knowing when to take profits. When I take a small profit turn, it runs without me. If I hold, it gets stopped out. I feel like I'm stuck in the middle. Any drills of profit targeting?" Yes, Barry, good question. Final question, and it's a great question. Pick one. The issue we have when traders is we flick back and forth, and we often are one leg behind or one step behind the market cycle. You try and hold a trade, and it constantly comes back, and you're like, "Oh, well, I've done that a few times now. Maybe I should grab profits," and the market kind of almost shifts conditions into a kind of range expansion market, and you're there grabbing A to B trades. Choose one, stick to one for a period of time, and log it. And normally that's the running the trade, because again, if we uncouple ourselves from thinking in terms of how to make the best profits we can and take that to one side and go, I'm just going to run trades, you get loads of data. Because if you run all the trades and you constantly get stopped, you can go, okay, is there any clue that I'm missing that could indicate that I need to take this as an A to B trade rather than a trade to hold, a trade to run? And thinking like that. So you kind of go, right, I got stopped again. That's okay. It's okay. It's okay. And then you look back and go, well, what are the attributes of trades that do hit that final target? Am I being a little bit too ambitious on that final target? What's the target like relative to the ATR on the day? Am I asking too much? Am I late in the trade anyway? And because I'm late in the trade anyway, there isn't really much juice left in it. Is it already, should I, and then you start to think a little bit more strategically about your positioning and your structure of your trade, because this is common and it gets frustrating. If you're not careful, Barry, you get so annoyed and angry, like, God damn it, I just feel like everything I do is a wrong turn. And so I hold it, it gets stopped out with time. And it's not really that. It's because by the time you've changed, the market shifts sentiment. So by default, you're always one step behind the market. And you can break that cycle by kind of trying to hold the trade, run the trade, and then going, what's happened? What's the objective of that? What do I need to adjust in a tweak? And then tweaking and adjusting based on that. And very often you'll start to see patterns and context that you might have missed. And you go, actually, look, when I try and run that trade there, I'm not taking into account the prior day's range. I'm not taking into account the positioning range on the daily. I haven't been taking into account the opening drive or whatever you're trading. And then you go, you know what? That's a primary filter for me. If we've got a narrow range day yesterday, just using this as an example, and I kind of buy a breakout today, then I'm going to hold for the end of the day because I think likely is that we do get that breakout. We've had a wide range day yesterday with a catalyst and we closed in the middle of the range. I'm not going to look for those higher profit targets because I've realized the context doesn't really suit that. And so when you do this, you run with that, just going to run the trade, run the trade, run the trade with the target drill, if you like. You go back and you review, and then you review from a perspective of, am I missing any context? I think you'll start to see things that perhaps you haven't seen um, before. All right, ladies and gents, we shall call it an evening there. Thank you so much for your questions. Thank you, Jacob. You're welcome. Thank you, Danius. Danius, you're welcome too. Thank you, ladies and gents. We'll call it an evening there. Back again, I think in 2 weeks' time. But if you're on my email list, you'll get a notification of that. If you're on Pepperstone's email list, they shall send you a notification too. Good trading. Keep your risk managed. As always, take care. Thank you, ladies and gents. Goodbye.